Okay, let's do a real task-based simulation. If you go to this website, the AICPA resources, learn what's on the test, you should have gone there to get your blueprint. Okay, so go there and download this particular TBS so that you can have it on your screen to do. So if you don't have it, stop the video right now, go get it, and come back. All right, so we will be doing a retired task-based simulation. The AICPA has provided this as a guidance for what to expect and how to complete something in, say, 20 to 30 minutes, which is pretty long TBS here. Its blueprint reference is FAR Area Group A, Topic 1, which happens to be the balance sheet. You are going to use analysis as one of your skills, and the representative task is detect, investigate, and correct discrepancies. Your exhibits will be identified here, and there are various ways that you can do your exhibits. You can do them like hitting them one across another. You can go and look for the one that needs to adjust. So whatever method you use, make sure it's methodical and that you check that you've looked at every one of the exhibits. Don't open up all of the exhibits before you start working. That's a waste of time for most people. If you feel that that's best for you, go ahead and do that. Okay, that's our resources. So once you have your resources, you will have a trial balance format for a balance sheet, and it will be in Excel. And we won't enter anything in here because this is something that you're going to enter on a screen. So this is on a screen here, okay? And these items are on a screen, okay? Let me pull away a little bit here for this, okay? So these items will be on the screen for you, all right? And so I have exhibits, and I'm going to look at my exhibits and see what they are in relationship to what I'm working on. Okay. Okay. So I have exhibits as well. So now what I need to do is these two things are on screen in front of me. What I'll need to do is use a piece of scrap paper. And my scrap paper will work. Okay, let me see if I can pull this back just a little bit here. Okay. My scrap paper will do the analysis. So I pull up my first exhibit and it's on accounts receivable. Yeah, you've got accounts receivable here. And I read the item. It's a memo. They recorded $27,000 crediting accounts receivable to close the sale. Okay, so they're recording a sale of accounts receivable. The account manager told the senior accountant that we entered into agreement to sell 30,000 of our outstanding accounts receivable balances. The agreement was made without recourse for 10% fee. We received $27,000 from the buyer today. That's the cash that they received right there. What do we have? So we have accounts receivable, and we have an error. Didn't record the 10%, which is equal to $3,000. Okay? So I have overstated. This is important to know whether you're overstated or understated your balance. So how are we going to record this? If we overstated accounts receivable by $3,000, we're going to credit accounts receivable $3,000, and we're going to debit this collection fee. So I need to debit a collection fee, but my balance sheet just shows retained earnings. I don't have the ability to post it to the other side. So what I'm going to do is down in the corner here, I'm going to keep a T account of retained earnings. Okay? And I'm going to post to retained earnings $3,000. I'm going to post that debit to $3,000 to retained earnings, and I'm going to say I'm going to do that because it means that I'm going to tick mark it on my, means that I've posted it there. Okay, so that is my I can't make any marks on this because that's on the screen, but I can enter something here, and it's a $3,000 credit. So I enter a $3,000 credit, and it's going to show up like this with brackets around it. And this amount is automatically going to change to $77,100. So my accounts receivable were overstated. The new balance is $77,100. It's less than, so my overstatement, so this has functioned properly if I show up with $77,100 in that amount. Okay, so that's how I verify that everything's gets posted correctly. Okay, our next entry is inventory. Let's take a look at this inventory amount. Okay, it's up on the screen. I've got inventory over here of $41,700. So let's take a look at my inventory. Okay, and I'm going to put the name of it because I just want to make sure that I can go back and review. Okay, so what kind of errors could I have in inventory? I have a count error, and I have something valuation with net realizable value. Let's see what we have in inventory right now. So the quantity per the subledger is 1,500 times $25 equals 37,500, and 140 times $30 is 4,200, and this is what I have right now in inventory. The quantity per the subledger and the unit cost historical. Yes, it agrees to the 41,000. Okay, that agrees to that beginning inventory. But what was my inventory supposed to be? 1,450? And if we multiply it times the unit cost, it would be 36,250. And this was 148 times 30 equals 4,440. Now let's talk about the lower of cost or market. So these two inventory items need to be appraised at lower of cost or market. So my lower cost or market for product A is $20. So 1,450 times $20. So my lower of cost or market is this amount, and it's 29,000 when I multiply it out. This 148, my net realizable is 35. It's higher, so I don't do this at all. So 35 is higher, so I don't even need to do a calculation. I just need to jump this forward here, 4,440. So my inventory should be, and it's overstated, okay, by a combination of these two errors. So I subtract this amount here, and I have a debit and a credit. So the inventory is overstated. I have to get it down to 33,440. I do the math, and I have to credit inventory $8,260. And retained earnings, which would be the cost of goods sold, flowed through the retained earnings. The retained earnings would be $8,260. So I'm going to put $8,260 down here in the retained earnings and show that I posted it. So $8,260 gets posted, and it's a reduction. So $8,260. Okay, and I mark that as, and this one will automatically change to $33,440. Okay, and I check to make sure that that agrees. After I put that in the Excel and I look at the screen and I say, yes, it agrees. Okay, that's my inventory. So that's what was on screen. And this I'm able to input and make changes on my screen. Okay, inventory. Usually lower of cost or market, FIFOs, that sort of thing, those kind of problems, usually only have 2, 3, 4 lines at the most, because they just want you to understand the concept of the lower cost or market or adjustments of inventory. Okay, so let's take a look at our next item. Okay, and I have another piece of scrap paper I'm going to use. Okay, so I have this one, and I have accounts payable and accrued expenses. Accounts payable and accrued expenses, $165,000. So here on the screen, I'm looking at $155,000 plus $10,000, and that equals the $165,000. Can't make any marks. It's just for those purposes. I scan the accounts accrued expenses, and they've done sales commissions for January, consulting fees for January year 4, so these look okay. I scan these documents here. Oh, wait a minute. This refers to the year 3. Okay. So accounts payable, and my subledger agrees. Okay. I scan these subsequent things and I see maintenance for $6,000. And then I see this invoice for general corporate matters for $27,500. And I need to pull this invoice. I need to pull a copy. Okay, one, because it's a large dollar amount, and also because it might have some additional information on it. It might be a split bill, which our lawyers really shouldn't do. So year 3, the December fees, so these should be included in our year for $27,500. I pulled a copy and verified. Okay, just like you do when you're auditing. So I looked at that, and then I look at some more, and I say, oh, no, inventory, supplies, those all look proper. No more things to accrue. So I look at this, and I say $33,500, accounts payable, understated. Okay. You can also use an O and a U, or an OS and a US, that kind of thing. You can abbreviate, but I want you to process it through your mind that it should be done this way. Okay, so you're thinking about it. So if your accounts payable are understated, you need to credit it to increase it. Okay, so you need to credit that to increase your accounts payable. Sorry about that. And these things would have gone to maintenance and legal, which are in the income statement, which closed out to what? Retained earnings, $33,500. Okay, Where was our retained earnings? 33,500. Okay, we put that on our retained earnings little footnote here for our other thing. So I have posted that. Now I'm going to post to the accounts payable 33,500. Now in this case, I'm crediting it, but a credit is going to increase that. So it's something that's non-bracketed. When I put that dollar amount in, I'm going to see that this amount here increase to 198,500. Now I'm verifying. I felt my accounts payable were understated. I needed to accrue these amounts. Now I'm looking at my trial balance. Is it now been increased? Okay, so they were understated here. They're increased here. Make sure you get your debits and credits correct on this. Okay, let's see. Our next exhibit happens to be intangible. Let me see, did this Guardian? Okay. Okay, I did that one. My next exhibit that I'm looking at is intangible assets. Intangible. The $20,000 addition to patent accounts is attributed to salary and benefit costs incurred to continue research and development activities during the development of a new product that is expected to be launched in year 4. So it's not yet launched. So intangibles is overstated. Okay, that 20,000, the 20,000 product not launched. Okay, doesn't belong in there. What am I going to debit? What am I going to credit? My intangible is overstated by 20,000. It should be in R&D, so that closes to retained earnings. Okay, that closes to retained earnings. So I'm going to post to my retained earnings. Okay, I'm going to post to my intangible assets 20,000, and that's going to have brackets because my intangibles have to go down to 45,000. Okay, so this new number should be 45,000. Okay, owing to $10,000 in accumulated amortization there. Okay. That's my intangible now. Let's see. Got one more exhibit. And it looks like I've got a home builder's addition to property, plant, and equipment. Well, that's a big number there in property, plant, and equipment, net of depreciation and so on. Okay, so what I read this and it says that they posted it to year 3. It's HVAC for manufacturing building installed December 31st, year 3, so there's no depreciation to worry about. 75,000 was taxed with shipping and handling, and they added $5,000 maintenance contract for the period of year 4. So this, oops, can't write on the screen. This $5,000 is in property, plant, and equipment, and should be property, plant, and equipment. Okay, I am going to abbreviate one of them. Okay, it's overstated. Okay, And the maintenance contract is prepaid. Okay, so that belongs in prepaid expenses, and it's understated. And the dollar amount is $5,000. So I have a debit and a credit. The credit is to PP&E. It's overstated by $5,000. And the prepaid expense needs to be debited by $5,000. Okay, so this is a reclassification. Okay, nothing belongs on, okay, nothing belongs on the T account. Nothing went to retained earnings. Okay, so I have 5,000 coming out of, okay, and this is going to be 815, and prepaid expenses takes on 5,000, and I have 7,500. And I can see these numbers, okay? I can see these numbers change, and I can say, okay, my prepaid says it was understated. So this is understated, now it's higher. PP&E was overstated, this is now lower, okay? It went the correct way. Okay. Now we have our journal entry. So the 5,000 was a reclass. I've got the 33, 20, 3,000, and 82.6. Okay, so I add these up. I get 64,760. That is a debit. Retained earnings are normal credit balances, so I am going to reduce retained earnings by that amount, and we're going to see this number reduce itself to 1013,840 or something like that. Okay. So keeping track of your retained earnings adjustments in a separate T account to be able to summarize them here. So we went back and we looked and we said, yes, all of my retained earnings have been posted, and all of my accounts have been posted. And I go back here and I look, and I'm on my T accounts. I see that I have these tick marks and I have these agreements to things. Okay, and from these paper notes, I can verify things. Okay, so everything's been verified here: accounts receivable, inventory, accounts payable, intangibles, PP&E, and prepaid or reclassification. So these are my notes, and this is what's on screen. And what's on screen will also foot, and we should be able to see that our total assets equal our total liabilities once they are adjusted. So this has been about a 20-minute problem according to the AICPA for an example of what they have for a task-based simulation. And I'm showing you how to utilize your note paper when you're working with things on screen and being able to identify what's on screen, okay? So if something happened and you look at this balance and, oh, something's out of balance, my assets don't equal my liabilities and stockholders' equity down here on these foot things, one of these numbers could be put in the wrong way. You go back to your notes. You've got your notes there. Which one was overstated? Which one was understated? And follow that along. Did you check? Did you do tick marks? Oh, here, there's no tick mark on this 3,000. Did I actually post that? So you can find your errors easier if you have organized notes and organized data on your scrap paper and not on the screen. Okay, so you won't be able to work on the screen. These you're able to work on the screen because you're able to input them, and they give you instructions in the beginning as to how to input it. So this has been Professor Campbell. Thank you very much. This has been the AICPA Retired Task-Based Simulation for Balance Sheet. Thank you.